I think that investors, one thing that they should be doing is starting to be comfortable with being uncomfortable. That doesn't mean that they should move into cash. That doesn't mean that they should get out of cyclicals. There are opportunities in the market, and the key right now is to set up very diversified portfolios. So what we're going to, the themes that we're looking at is EM, so a flow towards EM markets in a more diversified stance. China is going to be a bigger part of investors' portfolios going forward. We're looking at technology. We still think that's a theme, and the reason for that is move towards mobility, move towards this work from home mindset, and then ESG, right? ESG is a particularly interesting one where if you asked me 2 years ago, I would say that the G factor in ESG governance was the key factor to adding return. But now we're seeing that the E and the S, environmental and social consciousness and focus, are going to be the returning factors. And that, again, leads back to technology and energy transition as key opportunities in the market.
Right, you mentioned China there, and I note that you are particularly positive on the China market. Is this because the recovery there is ahead of elsewhere?
Yes, I think that in this market, you really need to follow the COVID-19. You need to follow where and what markets were able to crush this virus the quickest. And China has been one of those markets. That's one of the keys. The other key is that I believe the US-China trade dispute was taken in an exaggerated manner, more risky than it was. We've seen from just this display with TikTok what the actual results of that trade dispute are, right? So if you were a Chinese company and someone told you that all you had to do to legitimize yourself in the global framework is to take a 20% partner who would work with you to regulate you on the U.S. basis, so answer any questions that the regulators have and help commercialize the platform. I think that most Chinese companies would take that deal. So I think it was a plus for ByteDance, it was a plus for Oracle, plus for Walmart, plus for China. But I'm trying to read through the news. I can't see how it was a plus for the current administration in the U.S.
Paul, I want to follow on to that because we're just a little over a month away from November 4th, from the U.S. presidential election. How likely do you think it's going to be that we see a market correction prior to November 4th?
So what I'm looking at right now is three layers, right? You have the regulations, you have the lawmakers, you have Wall Street, and you have Main Street, right? Wall Street has obviously been in a very bullish stance. Main Street has not been, right? So the employment numbers are still around 8%. And I don't see that coming down to the level that they were previously, right? Because a lot of companies have optimized. And I would be more worried if going into 2021, we see those unemployment numbers, because that would tell me that some of these corporations have just gone back to business as usual. So going into the election, I don't see, we may see some volatility. For example, if the Biden administration comes in, I think we're going to see some short-term volatility. But what it's going to serve to do is align the lawmakers, Wall Street, and Main Street, and that's going to create a more robust U.S. market in the medium and long term. So I think that this U.S. election, and usually elections are good for the market, I think this one will be also.